Let's now turn to the advisory and examine the risks of risk insurance. How much insurance should you have? Rob Gilmore joining us from Wealth Simplicity. Rob, good to see you again.
Good to see you again.
Insurance. We all know we need insurance, but there's many different types of insurance. And you talk about the risks. What are the risks then?
Well, you say that we all need insurance, and we don't necessarily all need insurance. This is something that does evolve throughout people's lives and the evolution of families as they progress through different stages and peak spending, and then later on towards retirement. And one of the things I do often see is people coming in that are well underinsured for their current needs, and also people that are overinsured. And it's important to always understand what the needs are and make sure that your insurance is aligned to those.
Well, how do you get that balance right then?
Well, it's important to obviously get advice and understand, well, basically what financial risks you're trying to cover. And as I mentioned, those risks will be different earlier on, but later on in life, when you are more well established, when the kids have left home, when there's no mortgage, then the need for large life insurance policies or income protection or other types of insurance, it does tend to dissipate. And that's at a time when premiums are starting to increase rapidly as people get older. So it's one to be very mindful in terms of the premiums you're paying for the cover that you're getting, to make sure that there's value and you're not gold plating anything.
Gold plating, indeed. And in fact, I see you saying you need to ensure the cost of those premiums doesn't in fact erode, I guess, your overall financial state.
Well, look, absolutely, and particularly if they're being paid out of superannuation, which is a very important consideration. But also it's just really understanding the value that you're getting. And quite often I see people with large insurance policies that they don't necessarily need, and I probably spend most of my time telling people that they need less insurance than they're currently carrying.
All right, which is certainly at odds with many advisors, because, well, I mean, they get kickbacks essentially, don't they, if they're recommending?
Well, look,
policies?
That's right. You always need to be mindful and look at these things through your own lens. You're not going to necessarily see someone pick up the phone and say, hey, I want to give myself a pay cut, you should have less insurance. So it's definitely something to be vigilant of, and I do often see people have been carrying policies for many, many years and not looked at them and been quite shocked at the cost, but also, the commissions that are behind those as well.
All right, and further to that, you're saying, okay, you take out a policy, you've got to look at that fine print just to see, I guess, what benefits you have.
Look, absolutely. I'm not discounting the value of advice and what the importance of getting proper insurance advice, but you do need to understand the terms and conditions, what you're actually getting insured for, but also more importantly, how it's structured. And that's where there can be some real pitfalls, particularly from an estate planning perspective, that your intentions may not necessarily be carried out because your insurance is not quite structured the right way, and there can be tax implications as well.
All right, and I guess particularly when we focus on life insurance, it pays obviously to look at who the beneficiaries are.
Look, absolutely. If it's owned by superannuation, then which most typically are, then the beneficiaries is actually going to be decided by the death benefit nomination in your super fund or SMSF, or it might be owned by an insurance company's super fund. So those death benefit nominations are particularly important because the payout of that insurance policy is not governed by your will.
All right. And well, then I guess if you're talking about death, inevitably, you've got to consider the probate and the delays associated with that.
Yeah, look, it can get really complex, and that's where you probably need to think about the insurance you're carrying in the context of your estate plan to make sure that your intentions are carried out. Particularly when insurance is owned by self-managed super funds, there are additional complexities involved around making sure that those intentions are appropriately carried out for you.
And as you say, really you've got to continue updating this, because depending on your life situation of whether you've just got married, whether you've had kids, whether you got divorced and so on.
Oh, look, absolutely. It's one to keep an eye on, be on top of those evolving needs. And like I said earlier, just think about it through your own lens, and it can be something as simple as sitting down with your partner over the table with a glass of wine and thinking, well, actually, what do we want to happen if something were to happen to each other or one another? And just going through those scenarios and think, does this feel right? Have we got the right protections in place? And maybe you do, maybe you don't. but just go through that process regularly to make sure all those bases are covered and you've got the appropriate safety nets in place.